Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES tested below yesterday's low, found responsive buyers, and quickly returned back above 75 quarter. At this point, heading into the open, our short-term bias continues to be fairly neutral, and we are going to be watching yesterday's low at 75 quarter and the initial support zone at 72 quarter, 74 quarter off the open. That's still an area where responsive buyers can be active. And then from there, if ES can hold above 75 quarter and 77 half, that would serve as a smaller time frame confirmation that buyers are indeed stepping in. And then on the upside, the first area of resistance is 81 to 83, and a breakout above that area would serve as a confirmation that buyers are now regaining control. And from there, we could go up and test 85 quarter to 86 quarter and potentially 88.75 to 90.75. Now, given that we are still running in a pretty light volume environment, it's unlikely that we're going to go much beyond the 88.75 to 90.75, even in the event that buyers step in and put in a reversal from the 72 quarter, 74 quarter area, or simply hold ES above yesterday's low of 75 quarter and then start pushing the market higher. So most likely, given that today's bias is neutral, in the event that the buyers do step in, it'll probably still be somewhat of a balanced type environment. But if we do start getting broad market strength and upside momentum, then that would be in alignment with the bigger picture bullish bias. So if we do start reversing here, then we could go back up and fill the gap at 86 and possibly test 88.75 to 90.75, at which point there may not be much more fuel left. On the downside, in the event of a break below 72 quarter to 74 quarter, responsive buyers can still be active on first test of 66 half to 68 half. In order to really get a sustained breakdown, we will have to see broad market weakness, a fairly negative advanced decline line that is trending lower, and we'd have to see the NYSE tick holding below zero. So right now, if you zoom out, you can see that the market has simply been balancing within this range. So we're in a very balanced market, and that's why our short-term bias is fairly neutral. That right now it can really tip in either direction, but in order for the market to sell off below initial support, we are going to have to see that downside momentum come into the market. And if there is a lack of weakness at initial support or at yesterday's low, then that could be enough of a signal that could attract more buyers into the market and then reverse this thing back up into 81 to 83. That would be the high probability target, with the overnight high and yesterday's high being within that zone. And then if buyers really are coming in and we're seeing some decent upside momentum, then we could easily test 85 quarter to 86 quarter as well. And then it's going to be a bit of a stretch to go beyond that into 88.75 to 90.75, but 81.83 and the 85 quarter, 86 quarter are within range, even on fairly light volume. And on the downside, if we are seeing broad market weakness and sustained downside momentum, then we could be retesting 66 half to 68 half. That's within range as well. And on first test, the expectation would be for responsive buyers to still defend that area because of the larger time frame bias still being bullish. And then below that, we have stronger support at 59 to 61. And at that point, you would be hitting a range extreme as well, given the recent light volume. So our short-term bias, like I said, is going to continue to be neutral. We are open to trades in either direction. But at this point, in order to take a short, we will have to see a lot of weakness on the day time frame, the other markets breaking down, and pretty strong downside momentum. Because absent any heavy selling, since we're trading near the bottom of the recent balance area, by default, responsive buyers should be getting a little bit more edge and they can step in. So right now the bias is neutral, but we have to see more from the sell side in order to take a short, because location's not going to be good on the short side. Whereas if you're buying initial support, then at the very minimum, you are securing decent trade location. Doesn't mean the trade has to work out, but trade location would be in the favor of buyers at 72 quarter to 74 quarter. And then off the open, in the event that we do test lower, we'll be watching to see whether ES can hold back above 75 quarter and 77 half. So those two levels can almost be viewed as the micro bull bear area, where if we're failing to get back above 75 quarter or 77 half and momentum's not really coming into the market, then we know that this is still a relatively weak market. But if we probe 72 quarter to 74 quarter, or maybe we don't even go down there, but in the event that we do, and we probe that area and then we return back above 75 quarter and 77 half, then that would be the confirmation that buyers did indeed step in at the zone, and from there we can go up and tag 81 to 83. So that's really the main scenario heading into the day. The other markets are shaping up to look a little bit better in terms of short-term strength. Russell and Nasdaq are holding up a bit better than the S&P, so that's another reason that we can still give a little bit more edge to the buyers at support here. So those are the main thoughts heading into the open. Let's see if the buyers can hold ES above 72 quarter to 74 quarter and yesterday's low of 75 quarter off the open, and we'll take it from there.